a bank letter as an audit procedure, but there is no requirement of you to learn the bank letter, but these are supposed to be learned. Okay, the other way we can gather evidence is by conducting a receivables confirmation. Remember, the audit procedure we talked about was confirmation. So one of the important ways of confirming your data's balances is by confirming directly from your debtors. Some people call it as debtors secularization. So what are external confirmations? So external confirmations is the audit evidence obtained as a direct written response to the auditor from a third party in paper form or electronic or other media. In simple terms, you as an auditor is requesting for a written response from a third party to confirm the accuracy of a balance, mostly. So if you are doubting the bank balance, ask the bank. But here we are focusing on receivable. So you are doubting a receivables balance. Then what should you do? Ask the receivable, write a letter to the receivable and ask about the balance. There are two types of receivables confirmation. There is positive confirmation and negative confirmation. So positive confirmation is whereby the auditor requires you to agree or disagree with the information requested. For instance, you are the auditor, you are looking for information from me. So you write me a letter and say, my client has told me that you owe them 2 million. Do you agree or not? Alright? So when I agree, whether I agree or not, I have to respond. So I'll respond that I agree that I really owe this balance, or I do not I disagree that I don't owe this balance. That is a positive confirmation. However, a negative confirmation is whereby the auditor only asks you to respond when you disagree. So you write me, you are the auditor, you write me a letter and say, you are owing our client 24 million. I would require you to respond only when you disagree. So if I agree with the balance, I'll just stay quiet. I'll not write you anything. But if I disagree, I'll say, dear auditor, I disagree with this balance. Out of the 24 million, I settled it, maybe 12 million. These are the details of the invoice. That's a negative confirmation. But a positive, you respond whether you agree or disagree. But a negative confirmation, you only respond when you disagree. So which is the best confirmation? The positive one. That's the best that you should use as an auditor. Okay, so the positive confirmation is the best, but what factors can cause the auditor to rely on the negative confirmation? To say someone will only respond when he disagrees. So the first one would be risk of material misstatement has been assessed as low. So I think you think the balance is correct, but you're just doubting. So you think there are no misstatements, or the fraud issues, if they are there, they're very minimal. The other reason would be you as an auditor has obtained sufficient approved audit evidence on the operating effectiveness of relevant control. So you trust the internal controls. So if the controls are strong, it means the risk of material misstatements are minimal. Also, when the population consists of large number of small, homogeneous account balances. So homogeneous means those account balances which are similar. A good example would be a school. At school, people pay the same fees. Let's say you are auditing a primary school, the school fees are only 100,000 per term. So the auditor sees that these amounts are very small and they are similar. Then I don't need to ask for a positive confirmation. A very low exception rate is expected. Exception rate means the differences between what the client is telling you and what your client is telling you and what the customer can tell you are the differences could be very minimal. Then you can go for negative confirmation. Also, the auditor is not aware of circumstances or conditions that would cause customers to disregard the request. So the auditor is not aware that, or does not doubt that the customer can disregard. He is sure that these customers are going to provide the right information. Now, as an auditor, before you go for data confirmation, you need to select accounts for auditing. So how do you select the accounts for auditing or for questioning? So you question those customers and you pay special attention to those who have got old and paid balances. So you go to remember the most common source of evidence is the accounting system. So you go to the accounting system, whether Excel or Sage, and you notice that there's a customer who is owing or has an invoice dated 31 October 2021. What comes to your mind? I think I should ask this person, why is still owing the balance? The second person you can look at is accounts written off during the period under review. So the time you are auditing, then you have found that a certain customer has been written off, bad debts. That's a doubt, because it might show that there was a fraud taking place. So you need to ask that customer, is it true that they are bad debts and you have failed to pay? Accounts with credit balances. Remember, receivables always have a debit balance, but you find that it's a credit balance. Credit balance, it means the customers overpaid you. So if you see those customers who have overpaid, you need to question them. Accounts settled by lump sum payments. For example, the customer was owing you 1,490,000, but the customer has settled it 1.5 million. Even though the difference is just 10, you should doubt this. So, something is wrong. The amount was, I would repeat, 1,490,000, but the customer settled it 4.5 million. Even though the difference is only 10,000, but something could be wrong. You can ask them questions. Accounts with new balances. So an account has got no balance at all. Most customers have balances, especially in schools and the rest. But if you see several new balances, especially in the banks, the customer has got no balance in a loan, you can ask questions. Accounts have been paid by the date of examination. So you have just examined the receivables today, we are auditing them, then tomorrow somebody pays. That's a question. Why is it a question? There will be a chance that the customer paid long time ago, these people are trying to steal money, but because the auditor is present, they are afraid. They say, we might be caught. So they try to record as if the customer has paid. So this can come as a question. Sometimes, I've never seen it in the exam, but they can give you a scenario and say, as an auditor, choose accounts which should be selected for confirmation, or which accounts would you go for, should you go for confirmation. So you have to look at those factors just mentioned here. Exceptions and non-response. So what is an exception? You need to understand these definitions. An exception is a response that shows the difference between the information requested to be confirmed or contained in the entity's records and information provided by the confirming party. So we have asked the customer, do you owe 9 million? But the customer says, I only owe 8 million. So the difference is an exception. While a response is a failure of the confirming party to respond or fully respond to a positive confirmation request, or confirmation request returned and delivered. In simple terms, you have asked the customer to respond, he has not responded, or he has not even delivered the letter. Sometimes the auditor can give the letter to the client. Can you please send this to the letter to your client? Can you please send this to the debtors? Then the client is not sending that letter. That's also in a response. So why could we have exceptions? Differences between what the auditor is requesting and the response of the customer. One, there's a dispute between the client and the customer, so there might be some disputes. Maybe the customer has paid, or the client has not recorded, or Yeah, or maybe uh, the customer has paid the whole balance, but the client says, uh, no, you have paid less than what we agreed, or maybe poor quality of goods and the customer is not willing to pay. I have repeated the first point, but the second point says the customer may have sent the money before the year ends, but the monies were not recorded by the client as receipts until the year ends. That's straightforward. Monies received may have been posted to the wrong account or in cash in transit account. So sometimes the customer might have paid the money, however, okay, Spond is trying to join in. Welcome, Spond. You have joined in very late.
Yeah, I'm about to finish.
Yeah, you can just listen. Okay.
Yeah. But I hope you are recording the video.
Yes, we are recording. Okay,
Okay,
so
then that's fine.
yeah,
I'll watch after.
all right. Okay, so the other reason why there is an exception, difference between what the client is looking for and what the customer is responding could be money is received but posted the wrong account. So the customer has paid, James has paid. Unfortunately, this cash has been recorded to John's account. That could be the other reason. The other reason is customers who are surprised may not of branches owing and owed. In accounting, we have contra. It might happen that the same person is your supplier, the same person is your customer. Example, you run a restaurant, you buy maize from Chipiku stores, for instance. However, Chipiku stores also comes and buy your meals. So the two can offset. You can agree to say, okay, you're owing us 1 million and we're owing you 2 million. Can you just offset? So this could be the other reasons why there are exceptions. But the other one could be teaming and lending. I hope you understand teaming and lending, where people steal money. People forge receipts. For example, 1,000 kwacha, writing it in a pencil, and then labeling the other zero. That's stealing and lending. So this is another reason why there would be discrepancies. Liability of responses. Okay, I think there is an error here. Okay, so as an auditor, you are supposed to investigate whether these responses provided by the customer are correct. The customer says, I'm not only owing 2 million, I'm not owing 9 million. So how do you assess these responses to be reliable? So what you have to do as an auditor, you should make sure that you obtain further audit evidence so that you resolve any doubts that you have in this confirmation request. If you have undertaken confirmation and you doubt what the customer is providing, you're supposed to find other ways of evidence. Sometimes you can call this person by phone, not only by email. So you can contact this individual and ask, because sometimes the client can forge the requested information. Now, if you as an auditor have concluded that the response is not reliable, you doubt what the customer is providing, then you are supposed to evaluate this impact on the risk of material misstatements. In simple terms, the client is claiming that the customer is owing 10 million. But in action, the customer says, I'm owing only 2 million. Then if you look at this 8 million, is it material? Is it 1% of total assets, for example? Then you should also evaluate the nature, timing, and extent of other procedures. So should I use other procedures instead of confirmation? Should I just carry out an analytical review, maybe calculating the ratios and see the differences? Okay, now let's conclude on the last two areas.